Welcome to our video on how to invest your money in 2023. Investing is a crucial part of building long-term financial stability and wealth. By investing your money, you can potentially earn a higher return on your savings than if you simply left it in a savings account. Currently, the economic climate is showing signs of growth, with low unemployment and a strong stock market. This presents many opportunities for investment in the coming year. But, as with any investment, it's important to do your research and understand the potential risks and rewards before making any decisions. In this video, we'll discuss the importance of investing, the different types of investments to consider, and strategies for managing risk. We'll also provide tips on how to stay informed and make informed decisions. Whether you're a beginner or a seasoned investor, this video will provide valuable information to help you make the most of your money in 2023. Before you begin investing, it's important to do your research and develop a plan. This includes identifying your financial goals and understanding your risk tolerance. Different investment options come with varying levels of risk and potential return, so it's important to match your investments to your individual needs and goals. One of the most important steps in researching and planning is to familiarize yourself with the different types of investment options available. Some popular options include stocks, bonds, real estate, and cryptocurrency. Stocks, also known as equities, represent ownership in a company and can provide the potential for high returns, but they also come with a higher level of risk. Bonds, on the other hand, are a type of debt investment where an investor loans money to a company or government in exchange for regular interest payments and the return of principal at maturity. Bonds tend to be less risky than stocks but also have lower potential returns. Real estate investments can include buying property to rent out or investing in a real estate investment trust, REIT. These types of investments can provide a steady stream of income and potential appreciation in value, but they also come with the added responsibilities of being a landlord and the potential for fluctuations in the real estate market. Cryptocurrency, such as Bitcoin, is a digital or virtual currency that uses cryptography for security. Cryptocurrency investments can be highly volatile and risky, but they also have the potential for high returns. Once you've familiarized yourself with the different types of investment options, you can start to develop a plan that aligns with your financial goals and risk tolerance. Remember, it's important to diversify your investments and not put all your eggs in one basket. In the next section, we'll discuss how to diversify your portfolio and manage risk, so stay tuned. Diversification is a key aspect of investing. By spreading your money across different types of investments and sectors, you can minimize risk and maximize potential returns. When you diversify your investments, you're essentially spreading the risk across different sectors and industries. For example, if you only invest in one company and that company goes bankrupt, you'll lose all your investment. But if you invest in multiple companies in different sectors, the impact of any one company going bankrupt will be minimized. One strategy for diversifying your portfolio is to invest in different sectors, such as technology, healthcare, and finance. This way, if one sector is performing poorly, the others may still be performing well, providing balance to your portfolio. Another strategy for diversifying your portfolio is to invest in different geographic regions. This way, if one region is experiencing economic turmoil, the others may still be performing well. It's important to note that diversification does not guarantee a profit or protect against loss. But it's still an effective way to manage risk and increase the chances of achieving your financial goals. In addition to diversifying your portfolio, it's also important to regularly review and rebalance your investments to ensure they continue to align with your financial goals and risk tolerance. In conclusion, diversification is a key aspect of investing. It helps to spread risk and maximize potential returns. Remember to review and rebalance your investments regularly to ensure they align with your financial goals and risk tolerance. Investing always comes with some level of risk, but there are ways to manage it. In this section, we'll discuss various risk management techniques that can help you protect your investments and achieve your financial goals. One popular risk management technique is dollar cost averaging. This involves investing a fixed amount of money at regular intervals, regardless of the price of the investment. By doing this, you'll be buying more shares when prices are low and fewer shares when prices are high, which can help reduce your overall cost and manage risk. Another effective risk management technique is risk reduction through asset allocation. This involves spreading your investments across different asset classes, such as stocks, bonds, and cash. By doing this, you can reduce the risk of your portfolio being impacted by the performance of any one asset class. It's also important to monitor your investments and be prepared to make adjustments as market conditions change. This may include selling certain investments that are underperforming or reallocating assets to better align with your financial goals and risk tolerance. In conclusion, managing risk is an important aspect of investing. By using techniques such as dollar cost averaging and risk reduction through asset allocation, you can better protect your investments and achieve your financial goals. Remember to regularly monitor your investments and be prepared to make adjustments as market conditions change. Staying informed on market trends and news that may impact your investments is essential for making informed decisions and achieving your financial goals. In this section, we'll give you some tips for staying informed and the importance of working with a financial advisor or professional. One important way to stay informed is to regularly read financial news and publications. This can give you a sense of market trends and any potential opportunities or risks. Websites such as Wall Street Journal, Financial Times, and Forbes are a good place to start. Another way to stay informed is to follow financial experts on social media or through their newsletters. This can give you insight into their thoughts and analysis on the market and economy. Additionally, you can also attend financial seminars, webinars, and workshops. This is a great way to get in-depth information on specific topics and stay updated on the latest investment strategies. It's also important to remember that while staying informed is important, it's not a substitute for professional advice. Working with a financial advisor or professional can provide additional guidance and help you create a personalized investment plan that aligns with your financial goals and risk tolerance. In conclusion, staying informed is an important aspect of successful investing. By regularly reading financial news and publications, following financial experts, attending financial seminars and workshops, and working with a financial advisor or professional, you can make informed decisions and achieve your financial goals. In this video, we've discussed the importance of investing for long-term financial growth, the current economic climate, and potential opportunities for investment in 2023. We've also talked about the importance of researching different investment options, creating a plan based on individual financial goals and risk tolerance, diversifying your portfolio, and managing risk. Lastly, we've emphasized the importance of staying informed and working with a financial advisor or professional. As a recap, here are some key points to remember. 1. Investing is important for long-term financial growth. 2. Research different investment options and create a plan based on your financial goals and risk tolerance. 3. Diversify your portfolio to spread risk and maximize potential returns. 4. Manage risk through techniques such as dollar cost averaging and risk reduction through asset allocation. 5. Stay informed on market trends and news and work with a financial advisor or professional. 2023 is a new year and a new opportunity to take control of your financial future. Now is the time to take action and start investing for long-term financial growth. Remember that investing is a process and it takes time, so don't be afraid to take small steps and learn as you go. With the right mindset and a solid plan, you can achieve your financial goals and secure your financial future. Thanks for watching. We hope you found this video informative and helpful. If you have any questions or would like to learn more about investing, please leave a comment below. Don't forget to subscribe to our channel for more videos like this one, and hit the notification bell to stay updated on our latest content. Thanks again for tuning in, and we'll see you in the next video.